Well, here we are, ladies and gentlemen, and it's always exciting to have some of the people who are making this all happen in studio here. For a long time, I've been partnered up with USA Mortgage, the Flowers team, and now we get to finally get you guys in studio to share some of your expertise and why we've teamed up to make this all happen. Quick shout out I'll give Carroll House, one of our biggest sponsors, obviously, also. And then I always like to jump ahead and show, this is my favorite slide, Emile, as you know, and Steve, your husband.
Oh, yeah.
And there you guys are. We put that up on the wall because this all wouldn't be happening without you guys. So we appreciate you guys being part of the team here and helping us make this happen. Rob, good to have you on the show also. So I'll introduce everybody officially. This is Emily Flowers. She's a certified professional divorce.
Certified divorce lending professional.
There, I was close. Okay. And Rob, this is Rob Schmersahl. You are also, and that's what we're going to talk a little bit about today.
Mm-hmm. Yeah.
And kind of help people understand divorce. A lot of people, why do people have to sell a house? Somebody passes away, promotion, and a lot of times divorce is a big part of that.
It is.
And so now they've got designated professional organizations for that, and you guys are members and have done all the exams and passed the certifications and stuff, so that's pretty neat. So who wants to start off with this? Tell me a little bit about why this is so important.
I think I'll start because I have some special stuff for Rob. But, a CDLP is what we're called. It's a Certified Divorce Lending Professional. And so I'm not just a traditional lender. I have done, and we have done, extensive education on special guidelines and things like that go along with divorce. People typically they go through the divorce process and they get their divorce settlement agreement, and then the attorney in the divorce settlement agreement has said, the attorney or mediator has said, hey, you have to refinance your house, or you have to sell and then you can buy, and things like that. Only they may or may not have written the divorce settlement agreement in a way that allows the client to actually follow through and do that in the allotted period of time that they've given. And it's just really important that attorneys and judges and mediators and financial planners and CPAs and all the people that are involved in divorce know that there is a such thing as a certified divorce lender. And not only that, but we're a great resource. Bring us in at the very beginning at discovery so that we can help give those specific verbiage that they're going to need for those divorce settlement agreements, and work with those special guidelines, and so we can structure income and your debt load and all of those things. So that's why we're important, and we're really important at the beginning, not just, hey, go get this done after you're done.
Right.
So and Rob is our icing on the cake, because he is our operations manager and he's kind of our guideline guru. And so having him certified divorce, it just catapults our team into the experts that we really needed them to be, because he knows all the ins and outs.
Well, Rob, tell us a little bit, what are some of the guidelines? I mean, this is obviously a complicated scenario. You got two professionals usually that have careers separate from each other, and then income and different related factors. How does this all play out?
Yeah, Emily makes a great point, is getting in at the beginning stages and trying at discovery, trying to figure out what happens in a lot of cases, especially you have a married couple. When they originally bought their house, they probably bought the house using both their incomes, both their assets combined. Well, now we have a separation, we have a dissolution of marriage, and now one person now has to qualify or obtain a mortgage loan based off of one income, one set of assets. And that can be a lot more difficult. And in a lot of times, before CDLP or certified divorce lending professionals get involved, in a lot of cases you might have one spouse, husband or wife, say they want to keep the marital property, but that just because they want to keep the marital property doesn't mean that they have the capability of being able to qualify the loan in order to keep that marital property. Because again, when they obtained it the first time, they obtained it with dual income, and Now they might be trying to do it with one income. Another example is, what if separate maintenance or alimony or child support is a new source of income for, we'll just use husband and wife for the wife. Well, in a lot of cases, most attorneys or most wouldn't understand that, like, for example, most of your conventional lending requires the spouse to have to have 6 months of receipt of alimony or 6 months of receipt of child support in order for that to be a qualifying income. On top of it, whenever you used a fixed income like that, child support or alimony, you have to also have it for the next 36 months. So if the attorneys at the time of writing up the decree are not prepared for one of the borrowers to receive this for longer than 36 months, or probably longer than that, because by the time they receive it for 6 months, and then we're able to do the loan for them, and then continuation of 36 months, that's 42, and then throw 45 days for the mortgage process to kick in. Now you're at 43, 44, 45, months. If that's not presented in the divorce decree the right way, then you have a person that at the end of the day doesn't qualify for the loan, and cannot obtain or refinance that property, that marital property, into their own, and consequently is going against the decree. In contempt of court.
Yeah.
They were required. Yeah. The decision was made for them to refinance the property, and they can't, because the divorce decree wasn't written accordingly to allow one of the spouses to qualify for the loan.
So this becomes a complicated process, and there's assets that are, houses at stake here that could potentially, what happens if something doesn't work out? Does it go to a foreclosure situation, or how do we end up dealing with this, and what are you trying to help them circumvent?
Or sale.
Well, yeah. What ultimately I think what you run into as a problem is, if somebody is in contempt, then you end up going back to court, and then there has to then be a decision of, if I don't have the qualification to refinance this property, out of both of our names and just into one, then they might be required to sell the property, when that was not the intention, at the beginning. So our goal, as Emily made the point early, is that you want to bring in our expertise at the beginning to help determine, what is the best route. And it may not be the best route for one person to refinance the property. It might be the best route to sell the property, and they make the decision of splitting proceeds, and one spouse gets X amount, the other spouse gets X amount, based off of what they agree upon. Once they do, but then most people want to, at that point, purchase again. But at the same time, if they just think, we sell, I'll just purchase again, the same criteria still comes into play. Yeah. For example, again, go back to the alimony, go back to the child support situation. If you don't receive for 6 months and you don't continue it for 36 months, you're in a position of not being able to qualify also.
Yeah. I've seen 32 months flat on a divorce decree before, and I had to write attorney letters and do all kinds of things. There's things that can be done in advance, and we can even outline exactly how much they're going to need so that they can keep the house, because the house is emotional. It's been the home. It's been the marital home with or without children. It's a very emotional thing. So it's very important, if somebody wants to keep it, that we do our divorce mortgage planning, and we have spreadsheets and all kinds of stuff for that to help us figure out how we're going to accomplish this. Is it lump sum payouts? Is it monthly? Is it this? Is it that? How can we help them accomplish their goal and be healthy and whole when the marital property is separated?
Well, that's the key to this. There's a lot of you don't want to end up losing a house in the middle of this, right? And there's as an asset, somebody might have had $100,000 in equity, that's quite a loss for somebody. And so this kind of planning helps people to circumvent that, and at least to where they can get to a situation at minimum, sell it so they can get back what they put into it. And then hopefully one of them can afford to take over the house, and that's what happens most of the time.
Yeah.
Is that the case? How often is this a type of mortgage that you run into that you have to process and help people with?
All the time. I mean, we do several a month.
Several a month.
So we work with several like attorneys and mediators and things like that we have relationships with, and then we're actually teaching a continuing legal education course coming up here soon. So we're able to do lunch and learns and actually give the attorneys, mediators, judges, financial planners continuing legal education hours toward their licenses. We provide that value through the Divorce Lending Association, approved by the state that they're in, to help educate them on how to use us and how to help us be a resource to them so that they know that this is an issue. It's not write the divorce decree, go refinance, and the bank goes, oh, well, let's do a cash out refinance. And you're like, no, don't do that. That's not what's required here.
Okay.
Yeah.
So as a matter of when such a large asset becomes a potential liability in this case, where they're going, okay, we have a lot to lose here. I guess, given that the divorce rate is so high, there's a large percentage of times when. And how often is a house purchased by a husband and wife? I mean, that's what 90% of house purchases, I guess, these days, or somewhere in that ballpark. And then you're talking about half of those have something that has to be separated because of a divorce. Because is our divorce rate 50, almost 60%? Some people say,
and up to 80 for combat veterans.
80% for combat veterans. Okay. Well, Rob, tell us a little bit about when somebody enters this particular situation. How do they start moving forward to make sure that they don't lose their assets?
Yes, I think the key again, is getting Emily or myself involved at the beginning stage, because again, you have a couple choices. You're either going to do assuming they have marital property, you're going to do an equity buyout. One of the great things about an equity buyout is that if all you're truly doing is paying, whatever the determination of equity requirement is, and in a lot of cases it's 50%. That doesn't necessarily mean that's what it is, but because that part could be negotiated between the attorneys or the mediators. But whatever that amount happens to be, we can treat these refinances and equity buyouts, and they're not necessarily considered cash out refinances because you are being court ordered to pay off your spouse. So that's back to Emily's point, is that if the decree is written and then they just go to a regular mortgage lender that may not be familiar with what divorce lending laws may happen to be, or mortgage laws or mortgage guidelines that involve divorce situations, they may just go in there and say, we're going to do a cash out refinance. Well, the problem there is, pricing for a cash out refinance is a little bit higher. The requirements are a little bit greater. And in a lot of cases, you might be limited on your loan to value in those type of situations, because most cash out refinance limit you at like 80% loan to value. Well, that may not be the case. If you're doing an equity buyout paying off a spouse, you can go as high as 95%. And so that makes a big difference, because, that's what both parties want. They want fair and equitable, distribution of that asset, which we're referring to as the equity. The asset is the equity in that standpoint. So, but if you're not determining that at the beginning stages, and you're waiting till the decree is already written, you might be putting the borrower or the spouse, the husband and wife, when they go to do the equity refinance, you might be putting them at a disadvantage because it's not spelled out accordingly on the divorce decree. And so what we're trying to do is help the attorneys at the beginning stages of how do we write the decrees, how do we help with the verbiage in the decrees that are beneficial. One more piece that comes to that too. Most people escrow their taxes and insurance. Okay, when you pay off a loan, whatever your escrow balance is gets usually refunded. Depending on the loan amount, depending on what your taxes are on an annual basis, depending on what your insurance premiums are, it can pretty be a relatively healthy amount. $5,000, $10,000 that could be sitting there in escrow account that goes back to the person that had the original loan. Well, if that's not accounted for at the beginning, somebody could be receiving or losing,
Right.
$7,000, $10,000 that not many people are aware of that's existence.
Yeah.
So
The question comes to mind for me is, how often is it an uneven where the guy, for instance, makes $30,000 and the lady makes $150,000, but they're supposed to divide this house up. She doesn't want the house, he does, but he can't afford it. What's the situation there? How do they handle that? Do they force them into a sale, or where do they go with that?
It depends, right? So it depends upon who owes who what, how much, what we can count, all of those things. There's a million nuances in there in that scenario. So if we're trying to have that spouse, the lesser spouse, retain the home, then we're going to sit and we're going to look at their application. We have, again, this spreadsheet that we can plug in all these numbers and we can spit out what he's going to need in order to keep that home. Yeah. And so and we're constantly getting trained on new things. Our guidelines, and you know this, Carter, because you're a lender too, our lending guidelines change all the time. Well, divorce lending guidelines change all the time too. And so we are constantly, like every week, we get coached on some guideline or another, or some way to help attorneys, mediators, or clients, things like that. We're constantly trying to be the best referral partner that we can be for them.
Well, and that's where I see another key element to this is attorneys, financial planners, CPAs, mediators, judges use this resource. This is a structure in a DSA. Income debt load is so important. How does that all tie together? I mean, you've got a lot of high-powered, highly qualified professionals involved here, and that's what has to be used to make sure that this thing gets done right. Is that how this works out?
So you're a team, right? So and that's where we're trying to come from is, every couple who's getting a divorce needs a team of people around them to help all the parts and pieces come together. And we want to be part of that team. We're able to help structure and help get these pieces put into place and work together. There might be high-powered people involved, but there's a huge outcome here that we really need to be better at.
Okay. So as a matter of the team, Rob, tell me a little bit about when you're putting this together. Somebody comes to you, they go, Rob, me and Tina, we're getting divorced. What's the first thing you're going to ask them to help for this team effort? I put the hat on to represent. All right, now we're talking team. We're talking Cardinal Cowboy.
Yep.
That's where
We're on
the team is coming together for this. Walk me through the early steps of where first they're devastated. You end up becoming a counselor for this too, often as well.
Yeah.
Take me through the early steps of this and what somebody's going to have to go through.
So in the most beginning stages of it, what we're going to see a lot of times is, Emily will probably be the one that does the majority of this as far as the initial conversation regarding. We're going to ask them for introduction to their attorneys. That's probably the first thing. If a person would come to us as a consumer, like you said, Bill comes to us and says, "Hey, I'm going through the divorce," and our first reaction is, "Can you introduce us to your attorney? Can we have a conversation with them?" Because ultimately, what we need to then determine is, between husband and wife, what are their goals? What are they trying to accomplish with the real estate? And then we're going to ask other questions in regards to, other financial aspects. They're starting the process. They probably have a relatively good understanding of, who wants to keep the house. Have they discussed it? what other assets are in play, and then either in mediation, either they have their own attorneys, they're starting that process. What we want, again, go back, what we want to do with that initial conversation with the attorneys is, what are they trying to accomplish? What do they want to do with their assets, with their property? And then once we kind of get that gauge, then let's find out, can we qualify on an equity buyout? Is it more beneficial for them to, to sell the house? We're trying to do this. Again, I like to say we're professionals at this. We don't have a stake in this with the husband nor the wife. We're trying to find out and trying to help either or. What makes it a better? How do we help them with the real estate? How do we help with them with the current mortgage, or how do we help them with a subsequent mortgage if for some reason that doesn't work? So initial conversation is, please, let's talk to the attorneys and start from there. The other thought process to it would be is, if you have attorneys that we know that there's real estate involved and they're looking to figure out, okay, what's the best way to handle the real estate, that's when can you bring in a certified divorce lending professional like Emily or myself to answer their questions, to find out, does this work? Is this beneficial, or does this work? Can husband qualify to do an equity buyout? Can wife qualify to do an equity buyout? Maybe, maybe not. Another thing, Carter, that comes into play, what if they own multiple pieces of real estate? What if they have rental property? What if they have second homes? We're initiating this conversation here, assuming they own one piece of real estate. Yeah. You want to start getting a little more difficult? Let's start having conversations regarding rental property. Let's have conversations regarding second homes if they have them. Because in that instance, you still got to divide that up. But when you start moving into the to the investment properties more, now you have tax implications that you need to discuss. So what does that do? That's when you bring in your conversations of financial advisors. That's why you bring your tax accountants in, because we need to know what's happening with these properties. Is somebody going to retain? Is somebody going to go live in it? Well, if they go live in it and then they sell it in a year, now they have tax implications because it was an investment property at one point. So again, it goes back to the why you want a team of people in this process that can provide professional advice. I think that's a fair way to say it. Professional advice, but good professional advice and good information is really what you want to do.
Wow, so it gets deep. Emily, tell me, what are some of the scenarios? And Robert alluded to some of those there. When you end up in this situation, there's the opportunity for one or the other to take over. And what if neither one of them wants the house? They're both looking for new residences to purchase. Mm-hmm. How complicated does this get, and where do you step in to advise and make things happen for them?
Well, first is, what do they want? So we take that into account and we see if we can make that happen. And then the next part is, how do we qualify for all this? What are the numbers? And then there's so many moving parts with that, and how they're going to. My favorite scenario is, hey, so I'll just call title and we'll get a quit claim. And I'm like, nope, that won't work. You can't just get a quit claim because you're not removing them from the mortgage. And now if they choose not to pay the bill or do whatever, they're ruining your credit. They're tanking your credit. Wow. And so that's number one. Two, I've seen some pretty horrific divorce settlement and separation agreements where things weren't outlined with dates and the proper scenarios, where it's like, I saw one where 32 months of child support. That gets us zero, nowhere. So the woman she was in contempt and she had to go get a job because the divorce decree did not change. So, and they did not go back to court to get it to change. So there's so many scenarios that if you brought us in at the beginning, we could avoid all of these things and it could just play out very smoothly.
Well, and that's what we're hoping most people realize. I'm going to show everybody real quickly your guys' websites so that people can see a little bit about, you have certified divorce landing professional sites on their professional organization pages. And so if you're looking to get information specific to them about either Rob or Emily about this, check out their pages. You can see they're out there. Do a Google search if you like, or go to certifiedlandingassociation.com, and you can see here's Emily's page. I'll flip over here and we'll show them Rob's page. And this certifies that these guys have done the work to be certified and as professionals who are qualified to help you guys to get the information you need when it comes down to getting this taken care of, because this can be a very difficult situation for the family who says, hey, we can't make it work out between us, but that doesn't mean we have to put at risk all of our assets, which a lot of people do end up having. That's something they need to consider.
It is. And I'd also like for everybody to know, if we can work with both clients, it's one set of paperwork. We're not sharing. We have licenses. You can see our license number on the screen.
Right.
We cannot share with the other spouse or anything, but at least it's one set of paperwork that we can deal with, and we can get you on the same page at the same time, because we have control over the whole thing. So it's a really great resource, again, to have somebody like us.
Awesome. Well, as we finish up here, get a hold of Emily. You can call Emily direct. She's at 314. I'm going to put Emily's title up there for everybody so they can see that. But
I'm at 618.
I'm sorry. There it is. Sorry, 618-530-2444. Okay. And Rob, same way, but he's got a different phone number. 314. He's the 314. 314-518-9542.
That's right.
And find any kind of other relative information. You guys have pages on USA Mortgage.
Yep.
And see all your professional information and relative things there too, because you guys have been doing this for a long time. That's why I was excited to be able to team up with you guys.
Thank
because
you.
I know you guys are great. I know Steve real well, and just an awesome team. You guys, the team's growing, and
Yes.
in a time when everybody's having a tough time figuring this industry out because it's changed so dramatically, we're growing because we've got so many important professionals that we're going to help make this happen with. Well, with that, I'm going to share with you guys. Everybody, take a look here. We do designate our guests that are worthy as community leaders. So you and Rob get to share the community leader.
That's great.
There you go, guys. And so I welcome you guys to join our community of community leaders for the Cardinal Cowboy community leaders. And somebody, what you guys are doing, talk about impacting a community and having an impact on the lives of families and their kids and their grandkids and everything that goes into that. I'm so proud to have you guys on the show to be our world champion community leaders and help us do with that.
We're so grateful.
Any closing thoughts you guys have? If somebody said, I'm going through this, but I'm not sure where to go next, what's the first thing that should pop into mind?
You just gave out 2 phone numbers,
Yep.
Emily's or mine. I would say give us a call. You can, again, you gave the website that's got all our contact information. Sometimes maybe people don't want to necessarily initiate a phone call. They like things by email just because they want to do a little, comfortable feel. I get that too. Feel free. Obviously, just like anything, confidential conversations and confidential things, and we can have those things. So,
Stay tuned for more, everybody. Giddy up.